Welcome back to the Early Stage Investor, where we only focus on assets that could potentially provide life-changing returns because they're in the early stages of a massive growth cycle. So should you buy energy fuels? It's a great question. Let's dive into this asset. Energy Fuels is a U.S. critical mineral company centered on uranium that produces several advanced materials needed for the clean energy transition. Uranium, U is the stock ticker of this company. It's a leading U.S. producer of uranium, having produced two-thirds of all U.S. uranium since 2017, starting production at 3 uranium mines, planning to achieve an expected run rate of 1.1 to 1.4 million pounds of uranium per year by the end of 2024. So that's great news. They're already producing uranium. Production of uranium is already underway because something that I wasn't a fan of looking at this company was the fact that there are negative to no earnings. So this is the earning history. They've lost about 5 to 6 cents per share each quarter, except for March 31, 2024, when they made 2 cents per share, right? So very weak earnings across the board. Now, again, the only question you have to ask when looking at companies isn't if they're profitable now, it's will they become profitable in the future? So this is the revenue projection of energy fuels going forward from the Wall Street analysts that cover this company. We have the average quarterly revenue in June 2024 of $4 million, $3.8 million. Q3, $7.75 million is the average revenue. For the full year, we're looking at 70 million, right? So we have increasing earnings into year end, probably because uranium production will ramp up into year end, right? We have a current year forecast of 70 million, but look at next year. According to Wall Street analysts, next year, Energy Fuels is expected to generate $225 million in revenue, right? So yes, they have negative earnings now, but they could potentially grow those earnings. So let's dive into this company. So they have global production. They're globally diversified in some of the best jurisdictions, right? Mostly in the United States, which the United States government is pouring billions into the United States to create a uranium supply chain, right? So US producers should benefit significantly from this. That's why Energy Fuels revenue is projected to skyrocket next year. So massive for companies like Energy Fuels. They're heavily concentrated in the United States. And then they have some rare earth mines in Latin America, Africa, and Australia. This is how they see their core business. Uranium at the center. So they want to be primarily a uranium company for good reason. Very good fundamentals for uranium. It is the new oil. It's going to be powering everything, including Sam Altman's OpenAI, right? Sam Altman's OpenAI, which is one of the most significant AI companies on the planet, is going to be exclusively powered by uranium. Just one example. That's why uranium is such a huge deal right now. One of many reasons, right? So they want their core business to be uranium. The rest are ancillary. So here's a glimpse at their US uranium production. These 4 mines combine for up to 2 million pounds of short-term, low-cost production, right? We have the White Mesa Mill in production. We have the Pinyon Plain Mine in production. Pre-production, the Nichols Ranch ICR in Wyoming, and then the LaSalle Complex is also in production. So 3 mines in production. Very positive for this asset, right? One in pre-production, and then they have a development pipeline, right? As the nuclear renaissance unfolds and uranium becomes more and more valuable as a critical fuel, you want to see assets that are already producing uranium and can generate earnings and have a massive development pipeline. There are 3 mines in development, large-scale future uranium production. Sheep Mountain in Wyoming, Henry Mountain's Bullfrog in Utah, and then the Roca Honda in New Mexico. Again, the United States currently is the best, safest, most reliable jurisdiction for getting resources out of the ground. Phenomenal that your Energy Fuels is located in the US. Large scale in-ground uranium resources. Nearly 70 million pounds of combined uranium resources, combined potential to produce roughly 6 million pounds of uranium per year. That's what we have to look forward to. At an average price of $100 million per pound, which is a very reasonable projection for uranium at this point. It's already around $80 per pound. Energy Fuels has the potential to produce roughly 6 million. So that's $600 million in revenue. That's a 10x in revenue on their current revenue this year. That is massive for Energy Fuels. Sheep Mountain, fully permitted for mining, requires processing facility. Roca Honda and Bullfrog are in permitting stages, right? So just getting started in the early stages. Now let's talk about the revenue and cash flows for uranium sales for this company, right? Multiple market tailwinds enabling new spot and long-term sales contracts with U.S. utilities at sustainable pricing. The U.S. government, as I mentioned earlier, is providing support for nuclear energy. They're pumping money into the United States domestic production, which Energy Fuels should be one of the primary beneficiaries of this. Russia's invasion of Ukraine is sharpening utility focus on security of supply. They want to buy American. Energy Fuels offers buyers a reliable, low-cost source of U.S. uranium production, right? That is what makes this company unique. We're talking about a 10x in its revenue, potentially, over the next few years. Massive. So they have a price formula that maintains exposure to market upside while limiting downside and adjusting for inflation. So what they're doing is securing spot sales in periods of market strength. Very smart. They sold 100,000 pounds of uranium in Q1 2024 for $102.88 per pound, right? So right there, that's $10 million of cash flow. So they're getting a premium on their uranium. So here's another revenue stream for Energy Fuels, vanadium. These are their longer term growth opportunities, vanadium and medical isotopes. So the Energy Fuels White Mesa Mill is the largest conventional producer of vanadium, 1.9 million pounds produced in 2019, about 0.9 million pounds of vanadium currently in inventory. They're selectively producing and selling into market strength. They sold 79,000 pounds at $11 per pound in 2023. So right there, that's like 800K. These are small dollars. This is a small side of their business. They see longer term potential for vanadium and medical isotopes. The big game is uranium. So let's dive through the financials. This is really what matters, right? That's just an overview of what they're doing. These are the numbers. In Q1 2024, financial highlights. So they had continued earnings in Q1 2024 driven by uranium. So the first thing you see when looking at Energy Fuels is they have negative earnings. But if you look at the trend, it is up, right? They lost 5 cents in Q2 2023. They lost 5 cents in Q3 2023. They lost 6 cents in Q4 2024. They made 2 cents per share. That's what we're talking about, per share in Q1 2024. But the question is, will it continue? What matters? That's what we're going to dive into, right? So they're saying in Q1 2024, they did have earnings of 2 cents per share. That's $3.6 million of net income. They sold 300,000 pounds of uranium for gross profit of $14 million. What that equates to is about $47 of profit per pound, which means at today's spot price, their cost to produce is something like $30 per pound. Isn't anywhere near as low as Denison, but they're profiting. And it's well below spot price. And again, Wall Street is expecting this to continue, as I covered previously. The analysts that are covering this company believe that this will continue into the future. Over $0.24 billion of liquidity at current commodity prices. We covered Denison Mines. They have $400 million. Energy Fuels has $200 million of working capital as of March 31, 2024. Now, they do have a stack of physical uranium. So if the price of uranium rises, so will their inventory, their hoard of uranium. So as far as uranium sales for the remainder of 2024, they're evaluating the potential to sell additional uranium on the spot market. No further sales under long-term contracts currently scheduled in 2024, which is actually positive, right? Because the 200,000 pounds of uranium sales that were sold under long-term utility contracts at $75 per pound is not ideal if the price rises. It means the utility got it way cheaper than the actual spot market price. So it's actually kind of smart for them to not lock up their uranium in these long-term contracts. Now, by the end of the year, right, this is where it gets exciting because they're going to sell a few 100,000 pounds of uranium in 2024. Nothing crazy, nothing significant, but they want to ramp up ore production at 3 uranium mines, again, for a run rate of 1.1 to 1.4 million pounds per year by year end. So if the spot price of the uranium goes to $100, it's $100 million per year. That is how their revenue can skyrocket. That is very, 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 very positive. Growing growth, growing revenue, growing earnings. And again, just further out, they're increasing the near-term uranium production profile to 2 million pounds per year. Again, at $100 per pound, that's $200 million in revenue. Here's the other question. How will they finance this growth? Yes, they do have $200 million of capital available to invest in future projects. They have product inventory worth $41 million at current commodity prices. So as uranium goes up, they're going to have more and more on their balance sheet to finance future projects. That's what's kind of been exciting about uranium. The spot price has moved up because it's so scarce. That's the only way to get these mines into production is if the spot price goes up, right? And part of the reason why we're in this predicament to begin with, this supply crunch to begin with, is because the spot price has been so low. Well, now it's being forced up to incentivize mines like Energy Fuels to get it out of the ground. That's exactly what the United States government wants. So Energy Fuels is likely to have the liquidity to get these mines in production. That is why Wall Street analysts expect $200 million of revenue next year, which is very positive for the company. I hate to bore you with financials, but we have to look at their balance sheet, right? How much debt do they have? If they're drowning in debt, then none of this matters. Denison Mines has no debt. Let's see how much debt Energy Fuels has. They haven't released their Q2 numbers yet, but they're actually looking super, super, super clean. It does not look like they have any debt to speak of. Look at their total assets, $405 million compared to their total liabilities, 18 million. That is a very clean balance sheet. So it is very exciting. Interest rates are probably too high for them to take on debt currently, but they could easily take on debt, finance these mines, get them into production, and cash flow very, very, very easily because they have such a squeaky clean balance sheet. So that's a thing of absolute beauty. That is really good. Look, their total current assets, meaning the assets that are liquid that they could sell within a year, 228 million. Their total current liabilities that they have to pay within the next year, 5.5 million, right? They are swimming in cash. They are very well positioned to take advantage of the future growth. That is what I was waiting to see, the balance sheet, before making a decision on this company. It seems like they're going to continue to grow. They have a very clean balance sheet, which is going to enable them to grow further. They have all the tailwinds of being a US domestic supplier of uranium. Their revenue is going to skyrocket. We already saw their Q1 revenue and earnings go up significantly. And so this is a growth story. It is absolutely a buy. Obviously, we want to buy this stuff as cheap as possible and dollar cost average, but this company is solid. It's not going anywhere. It's a growth story. It is incredibly well positioned to take advantage of the coming nuclear renaissance. Thank you for watching. We're going to cover more of these assets. In fact, we're probably going to end up covering every single uranium mine and any other company you want me to look into. Just let me know which company you want to dive into next.